Brought to you by the Every Dollar app. Start budgeting for free today.
My question is this. I'm about to close my escrow, and the current interest rate that I'm locked in is really high. It's like 6.875.
Okay.
And my loan officer tells me, hey, don't worry about it. In about a year, 2 years down the line, interest rate is going to go down. You're going to refinance, so that's fine. And I want to put in, I have the potential to put in a lot of money, like upfront, because from the calculation from your show, teaches me how these things works, right? And so it's just mathematics.
Yeah.
And so my loan, so I'm shopping around like with two different loan officers along with my realtor, and they all wonder, why would you want to put money up front?
Because they're
right
not
now,
financial advisors. They just want to get you in this house. And they're filtering it through what they would do. A lot of people, it's human nature. If you give advice, you're kind of giving advice based on what you might do.
And a lot of these loan officers for homes, most of their life is people trying to scrape together and mow lawns to get that 2.999 up to 3%. Like it's so hard to find people who actually save money like you, David.
Okay.
It's just rare.
So I just want to make sure that my math is not wrong somewhere. Where they suggest this: save your money now and wait until you refinance. Let's say right now I'm at 6.8, right?
Okay.
Wait until let's say it goes down to 4, and then put in all the money in when you refinance to 4%. And I'm punching my number. I'm like, no, still it won't benefit me by putting it in later in life versus now. And even if later in life is also
and you can't predict the future. That's the truth. Mm-hmm. We can speculate and say, here's what we think will happen. But the truth is, the Fed lowered interest rates, and it had an adverse effect on the home market temporarily, I think. I think there's a lot of things that affect that. But right now, those home loans went up just slightly, those interest rates. And so you never know what's going to take place. We're in an election cycle. You don't know. I would tend to agree. Yeah, I think over time, mortgage rates are going to go down and you'll be able to refinance. But you truly don't know. You have the money here and now, and you have the ability to affect how you want your mortgage to feel here and now. And so if you want to put as much down possible, I vote for that, because when you put as much down possible, it's definitely lowering your payment. It's ensuring equity, and it's getting you to the point of payoff a lot faster. And then, in 2 years or whatever, if you want to refinance to get that lower rate, it's up to you to do so.
David, how much are we talking here? Like how much cash are you sitting on that you're debating on whether to put down or not?
I with all the minus my closing costs, I have about $65,000, sitting on the side collecting at only 4%. In
a high yield savings account.
Yeah.
Okay.
So it's only collecting at 4%, while my interest rate is at 6.8 right now. So it's more beneficial to put it in the house instead of just let it sit there at 4%.
Mm-hmm.
What's the total purchase price of this house?
The total purchase price is $485, and I'm putting down 25% already. But I want to put in more. But they're like, why? Why would you want to do that?
I think they just don't understand that way of thinking. I think most people are not thinking about the idea of paying off a mortgage.
Yeah, it's just not in people's mind.
The minimum possible to get in the house is enough for you. Is a lot of times where people's mind is at.
And can I throw an alternative in there that will just throw a wrench in all this for you, David?
Okay.
It's a different calculation that I do. I am not a numbers savant. I'm just not. I'm just not quick. Like Dave, I sit by Jay. They just do math in their head. It's amazing. I can't do that.
Okay.
Here's the different calculation I make. What job do you have? What do you do for a living?
So I'm basically I am in clinical trials.
In clinical. Okay. So you do R&D. You do research.
Yeah, research. Yes.
Okay. So let's say one of the new candidates comes in and just cuts off NIH funding all of a sudden, or does something like warp speeds it again, like Trump's Operation Warp Speed, right? And suddenly dumps a bunch of money, and you get to skip the third step and go straight to market. Like either way, imagine your job goes away. and you have to go find other work. The reason I would vote to put all the money down, aside from the math, and you've done the math, right? And so you're seeing it would be quote unquote making 6 point whatever percent, what my APR is, because it's only making 4 in this place. And I could put it in a mutual fund, and there's going to be the TikTok bros. They're like, bro, the gap, the spread, all that. But you're doing the math, right? The additional layer of peace that I would solve for in my house as a non-number guy is if I lost my job, but my mortgage was only $275 instead of $350, would that lower my payment enough that I could go get down the street and get a regular job and keep my home?
Okay.
Do you see what I'm saying?
Yeah, I do.
And so in my house, when I've taken out mortgages, I solve for peace. I care more. I call it a soul tax. I will pay 2% or 4% I will pay that so that I know if I got fired or if my job went away, I could go find another job or two and keep my home so my wife and my kids would not have to move. Mm-hmm. And I know that can be stretched out. And well, if you keep your $65,000 in an emergency fund, then you've got that to spend. I get all that. If I'm going to sign up for a mortgage, I want that payment to be something that I could absorb if and when something happens, right? And you're in a field, I'm in a field. Who knows what happens to us the day after tomorrow, right? And so I want to take as much risk off the table on these low level, on this side of the barbell, and that is, is my housing covered? Is my 4 walls covered? Do you have an emergency fund?
I do.
Yeah, dude. So that's all to say is, dude, I would solve for peace here. You've done the math, and you're right on the math. I would solve for peace and put this money down on a house and take out as small a mortgage as possible. Make the bank the least amount of money possible at your expense, and be able to take care of yourself if something were to happen to you. Does that sound right?
Okay. Yeah, sounds good. Thank you so much for your confirmation.
You're on it.
Create your free every dollar budget today, the simplest way to budget for your life.